Confused which Stockway category is best for you? Let's look into each of them. Today, we will be visiting small cap companies. These are companies that have their market cap under $2 billion.
Wow, that's super small, almost like startups.
Surely bigger than startups, but way smaller than companies like Apple, which have a $4 trillion market cap. This is the place where big money literally isn't allowed to play. Because if a $50 billion hedge fund tried to put just 1% of its money into a $100 million company, it would accidentally end up affecting the valuation and stock price massively and trigger an SEC investigation. So the giant algorithms ignore these stocks entirely.
So it's just retail trader versus retail trader?
Exactly. Since the trade volume and tracking is the least in these stocks, news and information about them gives the biggest edge out of all the categories. But the real secret to trading small caps is understanding the float. Beginners look at the total shares outstanding, whereas intermediates look at the float, which is the number of shares actually available to the public to trade. If a small cap company has a great product, but the CEO and early investors lock up 80% of the stock and refuse to sell, the public float is incredibly tiny.
How would that matter to me?
Well, when good news hits that stock, thousands of traders rush in to buy. But because the float is so small, the supply simply isn't there. The price doesn't just drift up, it violently explodes upward in a supply shock. That's what causes such a high amount of volatility. So, are you adding small caps to your watch list? Drop your favorite small cap ticker in the comments, hit that subscribe button, and we'll see you in the next one.